Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. All right, we are live with one of my favorite people. This person has went through our Sutton Capital Fund Accelerator, but he's just been a friend. You know, we've hung out when he's come out to New York. We've done some events. He's also kind of building a platform of his own. He's doing a lot of community building in the North Carolina area. But, I want to introduce everybody to all the listeners here to Gaurang Galla. Super savvy investor in the real estate space and also in the private equity space. He's the CEO and founder of Gala Investments, LLC. He's dedicated years addressing the pressing need for innovative housing solutions in the Research Triangle area. His work focuses on zoning and entitlements to bring impactful development to markets, including single-family residential, multifamily residential, mixed-use residential, and senior living projects. He's also a principal at Radius Capital Development, which is a real estate development firm focused on the core RTP market, Southern Durham, Morrisville, Cary, and Apex. And some of the asset classes that they cover, and we're going to go deeper on this, is Class A multifamily residential, luxury single-family residential, high-end mixed-use development, and luxury retail. So Gaurang, hopefully I did a good job kind of kicking this off and giving you the lighthouse intro. But welcome to the show.
Thank you for having me, Joel. It's great to be back. I remember, 18 short months ago when I was part of the cohort, being a real estate guy, being one of the few real estate guys in there, ton of venture folks in there. That venture ecosystem, I think, and the tech startup scene in New York City and around there is really amazing. But a lot of the glue, I think, that binds this country together is the real estate, the housing, the developments that really bring people together, especially after everything that we saw through COVID and where we are today.
Yeah, absolutely. Well, why don't you kick this off with just kind of a high-level overview on your career and your background? And obviously, you went through our program and you launched the fund, but there were some life changes too, professionally. Sometimes when we want to become the person that we want to become, we have to make a shift and sometimes make calls that can be scary because growth comes in the uncomfort, in the discomfort, right? Not the comfortable places that we're staying in. And I remember you and I had chats about that a while back. But tell us just a couple highlights on your career, your professional learnings going through that career journey. And, you gave me kind of a little bit of a life update. And, when we started, kind of maybe recap where you were about 18 months ago, kind of building this, first fund strategy. And now we're talking about the second strategy here. But, obviously for compliance purposes, this is not an offer to sell or purchase a security. We're just sharing, educational insights on the sector, specifically in North Carolina. So I'll let you take it from here, and we'll kind of just go back and forth and share some insights.
No, that's perfect. So my background over the last decade plus was in banking, finance, doing specifically commercial lending, SBA lending for small businesses, commercial real estate, and those types of industries. Yeah. And I kind of fell into the development by accident. And what ends up becoming a side hustle became 5 employees, a full-blown business, over 100 million at that time in the pipeline. And so when I came to you, Joel, I was like, how do I accelerate this? We were running SPVs for each specific project at the time. And Joel was like, well, you just need to create a fund and structure it these types of ways. And so went through cohorts, kind of learned that process, understanding on how you create a thesis and how you find alpha. So what we realized very quickly on how you find alpha is, especially in the real estate market and in the development market, is zoning and entitlement reform. Because what we've seen through private equity and consolidation is the financialization of everything. And this has also hit construction and development.
Yeah.
Today, a home, an apartment building, a data center, an industrial building is not built out in the field. It is built on a spreadsheet by MBA grads from Columbia or Wharton or Booth.
Sure.
Or in the South, you're going to have Emory, UNC, or Duke, right? And because of that, none of these companies want to take risk in entitlements. So what we found is if there's $100 of profit to be made from raw land to a finished building, no matter what that finished building is, single family home, townhome, apartment building, industrial building, 50 of those dollars is made, half the profit is made before you ever put a shovel in the ground, because now you have marketable land. And so we realized how we could create alpha is by building those relationships in local government, municipal government, to really push entitlement rezoning timelines and get approvals that these large publicly traded home builders and multifamily REIT developers like Camden Realty Trust, Graystar, Trammell Crow, Mill Creek, Wood Partners, all of them do not want to buy and sit on land for 3 years while rezoning and entitlements are approved. It doesn't fit their IRR and return for their institutional client, which again is a pension fund. New York teachers, firefighters, the same pension fund that has a 20% investment in venture has a 20 to 25% requirement in real estate.
Walk me through the process that you went through, maybe mentally, spiritually, and also professionally, kind of building that first fund. And, I mean, we went back and forth a lot, right, as we were kind of thinking through this. But, you tell me if you agree, it's the same amount of work at some point to raise a couple $1 million for an SPV, and then try to kind of obviously chase down investors, and then also chase down the allocation, right? A lot of times what happens is you have the allocation and the investors fizzle out, or you have all these investors that are fired up, and then you lose the allocation, and you're kind of always kind of dealing with supply and demand. But that is still the same financial product that you could sell through a fund structure, right? So I just want to hear your reaction to that, because I know we talked about that in the past, and then also just kind of walk us through kind of what was going on in your mind as you started getting, building your first fund. And, we've kind of went back and forth on this new strategy that you're building. So walk me through the evolution of that. I know it's a loaded question with like 2-3 questions inside of it. But I'm sure you're used to that.
You're 100% correct. What everyone in real estate does usually is you go find the deal, you take control of the deal, and then you go find money for that specific deal. That's how real estate has been done forever.
Sure.
And what I realized is now you're always working hand to mouth. You're always in a rush. You always have a timeline, a deadline, and you become at the mercy of the deal and the investor without really creating a system. So what we wanted to do is figure out how we turn that on its head, upside down.
Yeah.
And so what we're doing is we're showing a track record of our previous SPVs and the funds we've raised on projects and those exits, and saying, hey, we know what we're doing when it comes to rezoning, entitling, and selling.
Yeah.
We're not doing any of the construction here. You have to believe in the thesis and the theory.
Mhm.
And the idea here is we go and raise all of the capital first. When
Sure.
you have the capital and access to the capital just through commitments that may not be called yet or partially called, what it gives you access and ability to do is to win the best deals. When you have certainty to close, every top broker in the metro will call me first before putting a deal on the street. So now I get to see the best deals.
And you can take your time and, do the diligence that you need with no pressure.
Exactly. That was the next thing I was going to say. Took the words right out of my mouth. But that allows you to underwrite the deals and you start seeing so many deals.
Sure.
I've talked to my buddy, like I love venture. And this is one thing I tell people. Everyone in real estate loves to invest in tech.
Yeah.
Everyone in tech, especially what we call PEFs, post-exit founders, love to invest in real estate because it helps them shelter a lot of taxes on the venture side. And so it's a great, what's it called? Like a mutual ecosystem.
And it's always great too to get out of the bubble that because I think what's really interesting to your point, like if you go to a VC event, a lot of these events, it's especially in the real estate space. I mean, you start seeing the same people at these conferences, and we always tell people this. The LPs that you already know them. You've already pounded them, 4 or 5 times with your email marketing or just kind of your events that you host, and you want to have more bubbles and new people. And sometimes those VCs, they're probably just tired of seeing the same seed stage, or Series A deals, and, kind of getting access or exposure to real estate could be interesting, especially when they're thinking through their financial planning, and legacy planning for their family, right? I mean, they want to have kind of, some type of diversified approach where most financial planners probably give that advice too, right? To kind of think through a long-term strategy where you have some wealth creation, you have some active income, and then obviously you have a platform that gets you outsized returns, right? Because you're not going to get you're not going to get a 5,000x return. Maybe you have access to those, Gaurang, but usually traditionally in real estate,
nobody does, right?
Yeah, and
unless you invested.
And
unless you were the first investor in Uber.
Yeah, exactly. But even less so from the fund structure, right? People are not investing in the fund to get massive outsized returns. They're kind of getting the basket of those deals. And then the benefit of investing in the venture fund is actually you can possibly have the right to co-invest into Uber directly because you invested that ticket into the fund. And I guess that's a question for you. So like if people invest through a real estate fund, I'm assuming similarly there's opportunities to get access to some of those side pocket deals or extra allocations and other. It's like, hey, invest in my fund structure. We're doing all these massive projects in North Carolina, but look, there's a little bit of allocation left in this luxury condo development that's coming up, and minimum check size is 500K or something like that.
Exactly what you just said. We can structure side letters all the time in the fund to do that. And so a good example would be like this. If we had a plot in, I would say, in the city or in Brooklyn. Brooklyn's been booming, right? In Williamsburg. And I was able to rezone it and entitle it. And we were going to be selling to like an Apollo or a Blackstone that was going to build a 30-story apartment building.
Mm-hmm.
We were already going to make, let's say, $5 million, just a round figure. On that deal, we had raised $2.5 million in equity. It was a 2x return, right?
Mm-hmm. Yeah.
Some of those people, we can tell them, hey, Blackstone is also giving us a $10 million allocation in the vertical.
Mm-hmm.
Do you want to be in the vertical with a Blackstone because they're going to execute, right?
Yeah.
And the only other partners that they have are institutional quality.
Mm-hmm.
So now you're in the deal with a Toronto Teachers, a New York Firefighters, a PGIM, Northwest Mutual, you know?
Yeah.
And so that is the opportunity you get of being in a fund. When we hit these home runs on these multifamily deals, or we have a deal on a subdivision with Toll Brothers, and Toll Brothers says, hey, we also want the infrastructure done. And there's another 20, 30, 40% premium to be made on the infrastructure. We can get an additional infrastructure fund involved where now we're selling pad ready lots for these $2 million homes. And there is another vehicle for you to make more money on some of the home run deals.
Yeah. So, look, we're seeing everybody really build their personal brand, building their business's brand on social. And, I shared this yesterday. Even Steven Schwartzman at Blackstone, there's a handle called Schwartzman Holdings. And I just was really impressed. I mean, so there's a guy named Nadeem Megji. He's at Blackstone. He literally it's like they got a video of him like walking out of the investment committee. He's like, oh, I just walked out of the Blackstone investment committee. And these are the things that we're talking about. And deal volume is up the highest it's been in the last 2 years. And, one of the biggest things that they're looking at, obviously we can't have this podcast without talking about AI, right, Gaurang?
Right.
But one of their biggest conviction opportunities is data centers driven by AI in the cloud. So there's a real estate piece, obviously taking control of that land, but then also there's a whole dual use opportunity where those data centers are actual businesses that you're building on top of the real estate. They have huge conviction on the AI in the cloud, right? So how do you think about that? And tell us a little more about the North Carolina regions. I know you've been pretty active in Cary, but just talk to me about kind of like the dual use opportunities with data centers and AI and how that's plugging into the community there.
Love to talk data centers. I will just preface the antithesis is what you have in New York. Kathy Hochul has banned all data center development in the state of New York. And so what's happened is you're seeing a lot of that movement south. Northern Virginia, because of the U.S. government, has the largest cluster of data centers in the United States. I know 3 Northern Virginia data center developers that are now really moving south. What's the next state after Virginia? North Carolina. And so we've got the fiber optic network, the road network, the power. The newest nuclear power plant in the United States was Sharon Harris, built in 1979 in North Carolina, here in the Triangle. We're actually actively looking at a site right now where we're working with a data center developer out of Northern Virginia. It's very early in the process. I don't want to get too much into it.
Sure.
But it's 900 acres.
Wow.
This could be a potential 5 gigawatt data center site with 3 to 4 phases of development. We have spoken with Duke Energy and Dominion. We have natural gas and electricity both within a few miles of the access point.
Yeah.
We are currently working on the entitlements, i.e. zoning and those sorts of things. So when you get these types of opportunities, the property taxes that come to these municipalities, these are some of the poorest towns in North Carolina, which are the exurbs of some of the nicest parts of North Carolina around Charlotte and Raleigh. And so we want to give all of these places better access to public services, public utilities. And a lot of the data center developers we talk to now have such high margins. The margins are crazy. I think the cost per megawatt is like in the millions. right? And the numbers are just so high.
Yeah.
And as you've seen from OpenAI and Anthropic's growth, people are not using ChatGPT and Claude less. They're using it more and more every day.
So it's more tokens, and they're building stuff too. So I think that's super important too. You know, people are consuming the credits and the tokens, and they're also building their own software much faster, which is going to require more compute. That's why Elon Musk is essentially building a data center powered by fossil fuel. Essentially,
you have to
going backwards
because the biggest constraint though is power.
Yeah,
and what a lot of people don't realize with fossil fuels, natural gas burns very clean.
Yeah,
and we have an abundance of natural gas. Because with solar, the sun is not always shining.
Mm-hmm.
And with wind, the wind is not always blowing. Yeah. I'm a big proponent of nuclear, and we've got to build more nuclear plants in this country. But until we can change the regulatory framework, I think you have to have an all of the above resolution. And I think natural gas is number one in that. And that's why you're seeing him build in Texas, build in Tennessee. Also, these are states that want data centers.
Yeah, that's amazing. Well, as we wrap up, Gaurang, one thing that I always end every podcast with is just one piece of advice. So maybe your piece of advice could be one most important critical thing that you learned launching a fund. Now you're launching another fund, right? So just one piece of advice that you learned. It could be from our cohort, it could be from a mentor, it could be from a family member, but what do you want to share with us in terms of advice for new fund managers?
One of the biggest things I've learned, I think, was you've got to take the leap of faith.
Yeah.
I quit my job a year ago, August 1st, in banking, 10 plus years, the golden handcuffs, making over 400 grand a year. And it was because you have to have conviction and belief in yourself that everything is going to work out.
Yeah.
And don't try to be a perfectionist. Focus on the controllables, and you can always build the plane while you're in the air. That's how the smartest people do it.
Yeah, the most important thing is starting. I totally agree.
Yes.
So just get in the saddle. And Gaurang, it was amazing having you in the cohort. I feel like a lot of other people learn from you. And look, we got to do an event in Cary. So let me know when the next one is, and we'll try to get try to build community. For me, that's just been the most exciting thing. Just seeing fund managers that come out of our program. Now they're on like Fund 2, Fund 3, and then they're hosting an investor summit. And I'm like, wow, thanks for inviting me. I feel like honored that people would think about inviting me as well. And that just shows like people are building compounding communities. So thank you for all that you do. And it's so exciting to kind of see all the great stuff that you're doing and the traction you're getting because you believed in yourself. So.
No, I appreciate it, man. And next year, our Investor Summit 3.0, it'll be my third one. We'll have you as our keynote speaker. I'm excited for that.
Really appreciate it, man. We'll do something big, man. We'll get some other LPs out there and have a good time. But thanks again, Gaurang. Thanks for everybody else that popped on, and have a good rest of the week.
Thanks, everybody.
All right,
take care.
Bye. And how global markets are driving capital allocation. So join us on this journey as we explore these insights.